Hello everyone, good day, welcome, good morning if you are back in Western Australia, or good afternoon if you're up here in Darwin like myself or on the Eastern States. I'm Kevin Miller, and today we will be talking about no nonsense numbers. So I'll just share my screen and we'll crack on. So no nonsense numbers. Today's webinar is brought to you by Business Station as part of the Digital Solutions Programme, government subsidised programme where we can help people like yourself through workshops, webinars and one-to-one advisory. As I mentioned, we're here to help you, help small business, help people like yourself that are starting out, and help any of you that are a little bit longer through the journey. If you're not familiar with the program already, you can access 7 hours of expert advice. That's one-to-one advice, where we can help you with anything from marketing through to numbers like today, workshops and webinars, and all for the very low fee of $44. Fantastic value. And if you want to know more about that, jump online, businessstation.com.au. So if you're wondering who I am, I'm Kevin. I'm up here in Darwin, Northern Territory today. I'm originally from Perth, and prior to that, obviously, not native to Australia, from Scotland. I've spent 15 years back in Perth, Western Australia, in family business, small business, starting a small business from scratch and basically growing that right through to an extremely high turnover, a lot of staff, and yeah, a very large business. Learned a lot of lessons along the way. And all I'm here to do in this forum and in the one-to-one advisory service is to share some of those learnings and share some of those things I learned along the way. I work as an advisor, a business mentor, and I am a bit of an entrepreneur myself. Also involved in podcasts and radio, and I'll tell you more about that later on today. So what we're going to be talking about today is really about simplifying numbers. You know, it's one of those things that as small business owners, I'm a big advocate that we should know first and foremost, but it is something that we do get a little bit scared of, or we can be a little bit reluctant to sort of get involved in. So my aim today is really to simplify things for you, increase your confidence, and help you learn something that you can put to use in your own business. So what we'll talk about, the numbers that you should know. I don't want to overcomplicate matters. There is a few simple things that all small business owners should know, regardless if you're starting out or later on in the journey. We'll talk about budgeting, how you can use those budgets for creating financial plans for your business and potentially your growth. We'll cover over some of the jargon, the money terms, some of those terms you've heard out and about. You maybe went to your accountant and they're telling you names and things that you just think, oh, what are they? I'm going to clarify them for you. And I'm also going to talk through some tools and software to help you put it all to practice and make life and make numbers easier for your business. Before I start, what I should say is that I am not a finance professional. I'm not a bookkeeper, I'm not an accountant, but I have over 15 years experience in running a very successful business. I've been involved in lots of different things aside from that as well. And really, I just want to share the things that I've learned. But what I will say is, yeah, not a finance professional per se. So today, as I say, no nonsense numbers. Now, for me, simplifying money, that's what it's all about. I want to make it as straightforward and simple for you to understand your own finances in particular, personal and business. And for me, there's 3 things that really all of us should know. Every single business, anyone starting out, 3 very simple things that you should know in your business when it comes to money. And I've specifically put them in this order. So first things first, what money is going out of the business? What are you spending your hard-earned dollars on? Where is it going? Understanding where all that money is going. Obviously, where the money's coming in from as well. What clients, what areas of the market you're bringing money in from. And the best part, hopefully in the positive, what's left at the end, how much money you've got left in that bank account come the end of the journey, or the month or the quarter for that matter. So I've started with money out because money out really is one of those things for me. it's the easiest thing to determine. Generally speaking, you'll know what your costs are. You'll have some form of idea of what your costs might be for the business. And, that's the easiest place to start, is to get all them together and, make a list of all the things that are going to potentially cost you money, or at least that are costing your business money. Some of the terms that you'll have heard out there: expenditure, costs, expenses. They're not words, they're not terms that we like to hear as business owners, because it generally means we're parting with our hard-earned dollars. But those are the terms, that's what they are, and ultimately we do have to spend some money some places. And just understanding where that money is going is vitally important for your planning. Considering that with the money that we're spending as a business owner, there is different types of costs. There's fixed and there's variable. Obviously, some costs are set in stone. It might be internet, it might be mobile phones. You know what they are per month. That's maybe $60 a month here and there. But also there is unknown costs, or it is costs that might change. So, getting all the information together and understanding that there is two types of costs. The variable costs in particular, things like, I know in my own experience having a merchant facility, an FPOS machine. So some months it was a monthly cost to have the FPOS machine in the premises, or mobile for that matter. So let's just say it was $50 a month to have it, but not every single month we would be charged the same, because it would be dependent on the amount of transactions you put through that terminal. So that would be a variable cost, something to consider when you're planning your costs. And the other thing could be something like a lease or rent. Sometimes your lease may increase due to CPI and due to inflation. So thinking about, variable costs that you've maybe not realized that, the cost now, but they may change in the future. When you're working out your money, when you're working out what you're spending, I'm a big believer in working on worst case scenarios. If I think something's going to cost, or it does cost $58, then I'm generally a believer in rounding it up with an extra $2 in my pocket if the worst case scenario happens. So just thinking about, worst case scenarios and trying to allow for unforeseen costs in particular. Also thinking about frequency, how often something's coming off. How are you paying something monthly, like the FPOS terminal I mentioned, weekly? Knowing when and how you're spending your money allows you to plan, to make sure that you have that money to pay for it in the first place. Maybe you want to pay all your bills at the end of a month. Just thinking about it and really having the knowledge as a business owner and an understanding of where all your costs are and where they are coming from. And as I said, I do believe that the money out in particular is one of the easiest things to manage. It's one of those easiest things where you can sit down in a locked room and actually list them all, exactly what you think you might be spending on your business. The good stuff, obviously, what's coming in, money coming into the business. We're talking about, words that people would use out there: sales, income, turnover, revenue. They're all the main sort of terms when we associate the money coming into our business. Again, just thinking about where that money is coming from, what type of clients it's coming from. Is it a frequent payment? Is it a passive or recurring income? Are you being paid monthly, weekly? Are you a trade-based business and some of your larger builder clients are paying you sort of 90-day terms? Understanding the payment terms that you have with various different clients, how regular and how frequent those payments are, and just project your finances based on those pieces of information, I should say. So money in, money out. And of course, what I said before, what's left at the end, what's in that bank account or in your back pocket at the end of the day, which is, it's why we all get up to go to work at the end of the day. It's why we all work for ourselves. So what's left, that profit, it's why you're in business at the end of the day. We're all there to make money. And what I should clarify, and what I will go into later, is the two different types of profit that we can talk about. There's net profit and there's gross profit. And I'll explain exactly what they are very shortly. Now, once you get an understanding of what's coming in, what's going out, what's left, get a feel for everything that's happening in your small business, You can then take that information forward and use it to create budgets. Use it to create budgets around where you want to spend your money, how you want to spend your money, and maybe how frequent as well. So for me, the easiest way to talk about budgets for most people is to think about shopping, going your food shopping. Now, look, I don't do the food shopping too often, if I'm honest, but I know for certain that my wife, who does, will on average know exactly how much we are going to spend on our food shopping. She has a budget. She knows that weekly, fortnightly, for our family of four, we might spend, $250 a week. So the easiest way to sort of simplify budgeting is to sort of look it back to that model and sort of say, all right, I know exactly how much I'm going to spend on something like my food shopping. It's going to cost me $250 per week. I then take a list to the shops. I take that list with exactly what it is I want to spend my money on. I have a plan for what I want to spend my money on. When I go to the shops, I check against that list. We check against that list to make sure that we're getting everything we need, but also that we're not paying more than we paid last time. So that's the sort of simplest way of understanding a budget. If you get your head around that and sort of take that forward into business, it's very much the same. Budget is really just a plan on how you're going to spend your money. And we talked before about the understanding your money, where it comes from, where it's going. And it's your money at the end of the day. It's your dollars in the bank. It's your dollars in your back pocket. So understanding it's so important. And then understanding and having the knowledge about where you want to spend your money, budgeting, controlling your money. If you had $100 sitting on the table and somebody just took it away from you, you wouldn't be too happy. So making sure that you're controlling your money and you're planning on how you spend that money. When you're putting all this information together, I'm a big believer in focused time, and especially when it comes to money, especially when it comes to something that's vitally important and you need headspace, you need focus and clarity. So when you're collating the information, making the list, it might just be handwritten, it might be electronically, whatever it is, take your time. Lock yourself in a room if you have to, remove yourself from distractions, away from the children or the noise in the busy office, and focus your time and your energy on making those lists, making sure that you don't miss anything, because this information will build the foundations for your business when it comes to money, but it'll also give you such a valuable reference point later on in the journey as you track your performance and see how you're going. So, make time for it is, I guess, the key there, and find yourself some focus and some time away from distractions. And make those lists. Make those lists. So I'm a big advocate of lists. I'm a bit of a list maker myself. In particular, when it comes to money, you can't really deal with money unless you itemize things. And you might be thinking, oh, maybe I'm not the best list maker. I don't really know where to start. How do I go about it? Well, I'm going to talk you through just a few simple ways of actually doing that and working through that process. So thinking about making the list, putting it all together. First of all, use your experience. Use the things that you already know. So you might have left employment and stepped out into the business world, and you might have already worked in an industry where you've actually been involved in that industry for 5, 10, 15 years, whatever it might be. Think about the things that went into that industry previously. Think about the things that business or that organization that you were working for. Think about the things that on a daily basis that was happening around you that you can then take into the same industry but working for yourself. Thinking about costs, thinking about identifying things in the workplace, costs like, it might be, computer equipment, it might be a phone, whatever it might be. What was your company that you were doing and working for? Were they spending money on advertising? Do you know how much it was? Office space, how big was the office that you were working from previously? Do you need the same type of office again? A lot of the information that you need in order to replicate and put to use for yourself, you might already know. So I'd encourage you just to reflect back to maybe previous experience or any experiences that you've had along the way that can help you make that list. Just consider as well who else might be involved in putting together those lists and those budgets. Is there other people that might be able to give you some information? Is there employees or is there staff that can sit down with you in that focused time and actually give you some input? You don't always know everything as a business owner. There are a lot of it you're learning on the hop. So Is there anyone in your business? Your staff are at the front line. They're dealing with clients in a lot of cases. They're out and about, maybe on the road, whatever they're doing. Do they know something that maybe you don't? Do they have information about, they know how much they're spending on fuel if they're running around in a van. They might know how much waste there is on jobs. They're ask their opinions. Ask them for opinions on whether or not you're wasting money somewhere, and get the information. As many people as possible that you can get involved to help you build educated and forward planned and thought through lists. That's going to make your life so much easier. Considering that things don't always stay the same, that's the other thing when it comes to planning. Things will change. Nobody knew about COVID. Nobody knew that was around the corner. So just understanding that, yeah, we're going to make these lists. Yeah, we're going to create all this planning and get all this information together, but also that it is subject to change. So don't put too much pressure on yourself that you're going to get every single thing correct at the very beginning. What you're doing is you're building that list, you're building that structure, that foundation to then make decisions. But things will happen along the way, and I guess the point here being that don't put too much pressure on yourself. It can change in future, and just starting the process is just as important as getting everything exactly 100% at the beginning. So, things that you do know, we said about experience, obviously, and asking people for opinions, but there is always information that you maybe don't know, especially when it comes to money. If you're new to business, you might not have had the luxury of being able to forecast a few years in advance, to plan in advance. So finding information that you don't know is just as important. So obviously put to one side everything that you do know, use that experience, use the people you have at your disposal, get all that information together that you do know, but also identifying maybe what you don't know, writing down a list of what you think you don't have the information. It might be, I don't know how much a lease costs. It might be, I've not found out how much the supplier is going to charge yet. It might be, I'm not sure how much how much salary I'll pay an employee. There's just as many things that sometimes you don't know as you will. So my point being with what you don't know in particular is the information is generally out there. The information is available to us. There's so many tools nowadays. We can jump on Google, obviously, and find all information. But for instance, if you don't know the industry benchmark for how much you think your business will earn in the first financial year, a lot of those facts and figures you can find on the Australian Taxation Office website. You can find benchmarks of other industries and other people. If you're a hairdresser, for instance, and it's your first year of business working for yourself, you don't really know how much you're going to earn in that first year. So look for industry benchmarks from other businesses in a similar field or occupation, and find that information out. Benchmarks for employees, for salaries, for those sort of things. Really, you can find all that information out on a lot of websites that are out there, like business.gov.au. There are just heaps and heaps of stuff out there. And look, there's no silly questions at the end of the day. You can ask people like myself. We deal with small businesses all the time. We can maybe share information if it's available to us. There's a lot of government organisations, as I mentioned, small business association if you're back in Western Australia. So looking for information that you don't know, and I guess not being scared, just not being scared of the information that you don't know. Don't let it put you off doing the actual task. Don't let it put you off going forward with putting the planning together, because you will find the information. And if you can't find it, ask a question. So once you've got all that together, you've got all your information together, you want to start thinking about making a bit of a plan for your money, making that budget. And how to go about doing that? Yes, make the list, as I mentioned, but think about what your goals are. Your goals will be different to each and every one of you that's on today. Some of you might just be starting out, so it's just a matter of getting the foundations in place. Maybe you're later on in business and your goal is to now, the market's booming where you are, and you're thinking, I want to grow my business. So putting that into practice, maybe you're even thinking about, shrinking things, bringing things down a little bit, making it a bit more manageable for yourself. Certainly in my own experience, I've lived through all those things, from accelerated growth right through to making conscious decisions about maybe just making things a little bit more manageable. So you can do that, and your goals for those reasons, your purposes, will implement them into your planning. Implement that into your planning. So if you're growing, you're shrinking, whatever it might be, implement that into your financial plan. And also try and be realistic about put a time frame on it. You know, there's hold yourself to account at the end of the day. If you want to do it in a certain period of time, make sure it's feasible. Don't be unrealistic. You know, set goals that are achievable for you, and allows you the time to do everything properly. But just identifying your goals. You know, if you've not done it by now, identifying your goals for what you want to do for your business, in particular around money, they'll generally follow suit with maybe what your marketing plans are, or any other sort of goals that you have in your business plan. They're generally consistent when it comes to financial planning, marketing, or whatever else it is that you're trying to plan for your business. As I said before, I'm a big believer. I've been in business for over 15 years, and I'd still ask for input when I was doing this. I'd still ask anyone that I can for information. You don't need to agree with everyone. You know, you don't. Not everybody you're going to talk to is going to give you the information you want to hear. But just getting feedback, asking people, asking staff. You know, do you think this is feasible? Is this going to work? Looking out to business organizations like Small Business Development Corporation to find the information, as I mentioned earlier, collating it all together. The more information you have, the more knowledge you have, it's going to help you formulate your financial plans. Knowledge is power, as you say. Just making some estimates, thinking about, you know, our capital, you know, that name, what's capital? You might be wondering, well, how much of your own money do you need to put into the venture? How much of your own money do you need to put in to growing the business? How much of your own money do you need to put into buying that new item? Whatever it might be, do you need to put up any of your own money? Have you considered putting up any of your own money? Maybe you don't want to. So thinking about that, and or where you can get external capital from. Can you get an external investment? Is there somebody that will give you some money towards growing the business, or buying something, or getting a premises, or whatever it might be? So just understanding that you might need capital to achieve your goals. Again, time, frequency, when you want to achieve it. I would put a bit of a time frame in terms of how much hours you think you're going to devote to it if you're a single operator. You know, how many hours a month are you going to sit down and put to creating that financial plan? Obviously, people we mentioned as well. So, you know, thinking again about people in your business, out with your business, anyone and everyone that you can get to help you. People like ourselves, as I mentioned, anyone that can help you sort of get it all together, formulate some plans, and get the information on paper. So once you get all that together, numbers in, numbers out, your goals together, all that thought process, all that information, that exercise then creates what you would class as your master budget. Now, your master budget's your roadmap, going back to what we spoke about earlier, planning how you're going to spend your money. The key being that it's your money. It's your money. So planning how you are going to spend your money. And that budget, that master budget, gives you a little bit of a roadmap. There is budgets within budgets, and I'm going to talk about that now. So if you're in a product-based business, you might be selling units. So you might want to sit down. You might be selling, I don't know, you might be selling trainers. You might be you might be a fashion, a clothes outlet, something like that. And you might want to predict how much of a specific line that you're going to sell, because obviously you don't want to have dead stock. It's going to cost you money. But also you need to make sure that you can satisfy clients' requests, that you've got stock as and when required, and just making a bit of a projection about managing stock and managing your dollars at the end of the day. So thinking about, you know, putting a little maybe out inside that, or out with that master budget, creating another small budget around projected sales. What you think you might sell over a period of time. If you have a look at the little example there, generally it's over a quarter or a monthly basis. We're talking about the number of units that you might sell, how much each unit is worth, and what you think that final dollar value will be for that quarter or that month. And very simple budget, easy to create on Excel or something like that. There is lots of templates and tools out there, and I will share that information with you later. But certainly, again, in my own experience, I had a few retail premises many years ago, and there'd be certain lines of product that I would want to forecast how much I'm going to sell, how much I think I'm going to sell, because I'll be buying in containers of products, and I wanted to make a bit of a plan around, you know, where that money is being spent, how I'm going to sell those products, and give me a reference point to see how I'm tracking. So if any of you are in a product-based business in particular, this type of budget will be fantastic for you, and just breaking it down into little increments like quarters a month. Production as well, if you're in the business of actually producing something, you know, handmade clothes, it might be something, you know, something that you're making from scratch. Looking at, again, making sure you don't fall short, which we touched on before, making sure you have enough to satisfy orders, that you're not making more than you need at the end of the day, because, you know, it's dead money. It's just sitting there. You're wasting resources and potentially time and money at the same time. So, you know, do you need a production budget? You might need a sales budget. Have you thought about a production budget? Again, simple and easy to create. Looking again at time frames and frequencies like quarters, months, annual if you'd like to. You know your business, you know how often something might turn over. So you determine the frequency. It doesn't have to be set in stone. I guess at the end of the day, as I said before, it's your money and it's your business. So you dictate the frequency and you dictate what you need for your business. It's great just to have a bit of a picture as well. It gives you a bit of an idea of what's going on. Talking about the dollars, I'll be doing another webinar on cash flow soon, but cash flow is basically what you've got day to day to make everything happen, what makes it all go round. So we said sales budget, production budget, cash flow budget. What have you got in the bank? Where is that money going to go in the short term or the long term for that matter? What are you owed in? Just having an understanding, you know, just taking interest really is the key here. It's your dollars. It's your dollars at the end of the day. So where is it going? You know, getting confident about where your money's sitting at the moment and where it's going in the future. A cash flow budget is going to help you plan out. It's going to help you make sure that when those bills do come in, those expenses, you've got the money there to cover the cost of them. Nothing worse than getting a few invoices in and not having the money to pay for it. So making sure you've got the money to pay the bills, and of course, some left in at the end. And that all reverts back to the very, very beginning when I was talking about the three things really that we need to understand. Money out, money in, and what's left at the end. You also might be considering looking into maybe purchasing something. You know, again, in my own experience, I used to look at purchasing containers quite often, which would be a sizable amount of money. So I maybe spend $50,000 on a container of product. And I wanted to know that if I was going to spend that money, I was going to spend that capital, put that money out, my hard-earned money, my business's hard-earned money. I want to know that, first of all, is it worth me spending the money in the first place? Is the product going to sell? And when it does, am I going to get enough money back from that container to pay the bills and make some money at the end? And that's when we talk about return on investment. So thinking, you might be sitting there and you might be thinking, oh, I want to go and buy a vehicle, you know, a business vehicle. How much is it going to cost me? It might cost me $20,000. Is it something that I can afford? How much will it cost me per month, per year? Is it going to be beneficial to the business? Is it going to help me increase my turnover? Is it going to help me get clients? You know, putting a bit of a practice in place, a bit of headspace and a bit of thought into whether or not it is worth spending the money on certain things. And that's something that you can sit and do with myself, and it's a few of the digital solutions advisors, and your accountant or a financial professional. You can sit and work out what something might cost and whether or not it's viable, and you'll get some money back from it in the future. It might just be equipment for that matter. But again, it's just a thought process. It's just getting the thoughts going and getting your head in that frame of mind. So, you know, talking about budgets, we've spoken about money in, money out, how to make those lists and collate it all and just getting it all together in our heads and getting the thought process right. And I want to sort of, I guess, get rid of some jargon. You know, I mentioned at the very beginning about these terms, business speak. You know, there's a lot of business speak, especially when it comes to money. There's always business speak when it comes to money. So I want to go through some of the main ones that you should know as a small business owner in particular. Or, you know, if you've been in business even for five years, some people don't necessarily always know what these terms are. They leave it to their accountant. So I want to inform you, I want to educate you, and just remove some of that jargon, increase your confidence about some of these terms. I love this quote because everybody loves to talk about how much they're turning over. You know, some of the still to this day, so many people. I'll tell you, oh, how is business going? How's business going? Oh, wonderful. You know, we're turning over $1 million. We're turning over $100,000 a year. But at the end of the day, it doesn't matter how much you're turning over if you're not making any money. You know, you could be turning over $5 million and making a profit of $10,000. It's not worth it. You know, so I love this saying, and being a Scotsman, this was somebody back in Scotland many years ago that said this to me, and it's one that's always stuck with me. And you know, it's all fine and well saying that you're doing fantastically well, but if you're not making money, if you're not getting any money left in that bank account for yourself and for your business or your family, for that matter, then it's not all sunshine and rainbows. So turnover for vanity and profit for sanity. Love that one. And we're going to talk about what they are. So look, terms, what you need to know, terms, you know, jargon terms that you hear about when it comes to money. These are the main ones. I've put together some of the main ones that you should know and just simplify them. So you can go away from today and go, oh, do you know what? Yeah, I understand that now. That's simple. Like it's easy. Turnover. So I said turnover for vanity. Turnover, what it is. You know, I'll explain that in a second. I mentioned before there's two different types of profit. You know, there's gross profit and there's net profit. So we'll clarify just a little bit about what exactly they are, and we'll talk about margin. So four simple things, and hopefully just a little bit of confidence and clarity on exactly what they are for you and your business. So turnover, there we are. So turnover really is all about just bringing money in. You know, it's sales at the end of the day. It's what's coming in your bank. It's all that stuff that you've invoiced out or charged clients for. All that money that's sitting in the bank, sales. That's your turnover. That's where it starts. So hopefully all of you that are online today or listening to the recording, hopefully all of you have a little bit of turnover coming in. And that's where it starts. That's the starting point for everything that happens. Once we talk about turnover, then we're left with what's called your gross profit. Now, your gross profit is different to your net profit, which I'll explain in a second. But that's basically taking out the cost of goods sold. So if you were a furniture business or furniture business is a good example, or a bike wholesaler for that matter. You've got a retail store selling bikes. You sold bikes. You've got all this turnover coming into the business. Your gross profit is the dollar figure after you've paid the suppliers for all of those bikes, after you've paid for the cost of those goods. So it's generally the first thing that you'll see on your profit and loss. You'll have your turnover or your sales, and then you'll have your gross profit, which is less the purchases or cost of goods sold. So basically the items or the costs to get that good and service to market. Once we take the gross profit, the purchases or the cost of goods sold out of the equation, we're left with what most of us would call your bottom line. So that's the money that's left in your back pocket after we've taken out absolutely everything, taxes, any operating costs, whatever it might be. That's that dollar figure that's left on the very, very bottom of your profit and loss statement. That's what's left for you. That's your money that's in the business. That's the number that we want to see increase a lot over time, but hopefully it's a number that you have that's in the black anyway, at least. So net profit and gross profit, just understanding what they are. You know, you might get asked by your accountant or a bookkeeper about some of these things, and it's so much easier for you if you've got a bit of confidence around exactly what they are in the first place. So gross profit and net profit. Here's just a little drawing just to explain that again, just to simplify. It is one that people do get a little bit confused with. So going back to the revenue, your revenue is your turnover, as I mentioned. You've got your cost of goods sold in there. Once you take out those purchases, those costs of goods sold, you're left with your gross profit. That gross profit, then you take off your operating expenses, day-to-day costs, everything that's required to run the business. Take out your taxes then. That leaves you with that bottom line again. So that's what's left in your hand. That's the dollars that you can use to spend. You can use to pay yourself a lovely big bonus if you'd like to. But hopefully you're earning a net profit and it's in the black, as I said. Also talk about margins. Now, margins is something that is one of the biggest business speak things you'll probably hear. It comes when people talk about shares, they'll about margins, but in business in particular, everyone loves to talk margins, especially if you're in a sales focused role. And margins is all about percentages at the end of the day. So it's one of those terms that yeah you'll hear bandied about, and it applies to most businesses. And I'll explain shortly exactly how it is and how you can calculate it. So let's just look at this example. So we're talking, I mentioned the bike shop earlier. So you might be a retailer, you might be selling products, and the bike shop sells a bike for $100. The bike cost the business $66 from the supplier. So, simple math, $44 profit left over in the operator's hand. Now, to work out what your percentage margin is, so $44 left profit, divide that profit by the charge, the revenue, what you charge the client, times that by 100, and that bike retailer has made a 44% margin. So very simple maths, very simple way of understanding what you're making on a product. And you can apply that to most products or services. I mean, I used to have I guess when I used to be involved in timber flooring. When I'd sell a timber flooring job, the average job would maybe be $20,000, $30,000 to each individual client. And once we actually had complete the job, we had a worksheet that would fill in, electronic worksheet. We'd go through all the costs for that client. We'd go through everything that it cost the business to get that job out and get that job finished. And then we'd have a calculation behind the scenes that would tell us our basically every single job, the profit margin we're making. And it's very satisfying to know that you are making a profit as a business owner, for one. But when you see those margins, when you see that percentage increase over a period of time, or you know that it's consistent, it just means that you're doing something right. And especially if you're in a sales focused role, it's very valuable to you, and it's satisfying. It's good for your self-esteem. So making sure that you're making that margin and understanding the percentages. On the flip side of that, you might be someone that's sitting there with a product or service, and you might be thinking, oh, I need to add a margin onto my product. I know what it's cost me. I want to go and sell that product now, but how do I add a margin onto my product? What do I do? What's the sort of rough margin that we should put on there? Now here's a sort of simplified example. So cost caravan dealer $10,000 to buy his caravan. Somebody goes into his dealership, drops off the caravan. He offers them $10,000. Says, I'll take your caravan. Thanks very much, says the owner. I'll take my 10 grand, away I go. And he knows that it's cost him $10,000 roughly, including all his costs in his head, what that would cost to buy that caravan, 10 grand to the business. Now he sits there and he says, well, I want to now sell that caravan. I want to make 30%. I want to sell that out to the public, and I want to make 30% clean profit on that caravan. So he knows that it cost him $10,000. He says, I want to make 30%. It's as simple as adding 30% onto that product, that caravan in particular. So a $3,000 profit divided by what he sold it for gives us a 30% profit margin. Pretty simple equation to work out. And if you are sitting there with a product or a service, straightforward really in order for you to determine and add a margin onto it. Most retail businesses in this sort of setting will allow about 33% profit margin. Some people as high as 40 and 50%. So, and I guess having the profit margin doesn't always need to be the same on every single product as well, or service. So some products will be higher ticket items. They might be running at 50% margin. Others might be running at 30. The key here is to make sure that you are making money, that you are adding a percentage on. So if you're sitting there with a product or service, and you're thinking about adding a margin on, you'll get a copy of this anyway, and hopefully that just gives you a simplified version of creating a bit of a margin on your products or your service. So, all that information together, you've got to collate all that together, and you're sitting and you might be thinking, all right, that's great. I've worked my lists out, and I've got all the information together. What do I do now? I've done my plans. What can I use it all for? What am I going to do with it? Well, we'll go through some scenarios now. For me, as a business owner, as a former business owner, I love numbers. I love my list, as I mentioned, and I love numbers. And I just love to be able to track the performance of the business in particular, tracking and planning, tracking what's happening and planning out for the future. And numbers are the biggest, if not the best metric for doing that. You get a gut feeling, of course, as a business owner, you'll get a gut feeling for what's happening. You might feel like, wow, we're so busy this month, or things are a bit slower, or you might just feel like you're spending a lot of money. Sometimes it just feels like you're constantly paying bills rather than money coming in. So actually that intuition, that gut feeling, there's nothing better than being able to compare it to something in black and white, but you have to have that information created. You have to have that information where you can check and balance against that information. Now, yeah, it's all fine and well. Your accountant, your accountant can help you with that. But as a small business owner, the accountant doesn't know your business inside out. They're not sitting there involved in every single decision. Now, you might only speak to them at the end of a quarter or the end of a financial year. So don't rely on your accountant to put all that information together for you. Try and get in the practice and the habit of understanding and identifying all those things that we spoke about. So costs and clients and margins and net profit and gross profit. Just try and get an understanding of them, and try and educate yourself so that when you do go to an accountant at the end of that period of time, you're prepared, you're organized, you can make educated decisions about the future, you're planning. You might be sitting there and thinking that, oh, I need to evaluate my pricing. Maybe we're not selling as high enough volume as we were, or is there a reason why? Certainly for myself, there would be certain things, and often periods of time where I'd think, well, why are we not selling as much as we should be? Is it because we're charging too much, or we're charging too less? So having that black and white sales budget, production budget to refer back to, and actually see what my thoughts are versus what my plan was in the beginning, it just gives you so much clarity. And it's so difficult as a business owner. There's so many decisions to make that having something in paper, black and white form, is going to help you dramatically. So thinking about that information, collating information to gauge your performance, your pricing. Maybe you want to grow the business in the future. Something as simple as bringing on another staff member. I know myself in the early years of business, it was just myself at the beginning, but I'm thinking, oh, I need to bring on more people. We're very busy. I don't even know if I can afford to bring someone on. How do I go about doing that? Can I afford to pay somebody, a $60,000 a year salary, an $80,000 a year salary? If I didn't have that information and all the tools at hand, all that planning and time that I spent in the early years, if I didn't have all that there ready to refer to, I would have made those decisions so much harder. So I highly encourage you just to get it all together and start making those lists. Of course, you can use it to get professional opinions. You can take it out to market. You can take your financial plans out to investors. You might want somebody to give you a bit of dollars, give you a few quid to kick the business on. You might want to take it to your accountant to talk through. Just being prepared, just getting opinions. You might want to partner up with another business. You might want to sell yourself to someone to collaborate with. Having a solid financial plan is going to help you do that. Knowing your numbers, all your bells and whistles, everything about your business is going to make you such a stronger proposition. And as I said, planning, making sure that you can plan everything and get it all together in your head. So a couple of the main tools that can help you, electronically now, so many things out there that can help you put all this information together. I'm a big Excel man, a bit old school, but Excel's easy to use. It's all grids, it's simple. Predominantly, most of us have Excel nowadays, and Google's got its own version as well. I think it's called templates or workbooks from memory. So get on there and use them. Get on them and create some simple formulas to collate all your numbers together. If you don't want to pay the subscriptions for some of these other accounting platforms, you can get on there and muck around on Excel. We can help you with that. I'm helping a lot of clients at the moment just with creating these plans that I've mentioned, put it all together in Excel worksheets, and pre-populated formulas that they can change the numbers themselves, and just gives them something electronic and accessible, easy to find, with all the numbers in one place. So very simple, very easy to use Excel. FreshBooks is another one that's been mentioned to me in recent times. I've not used that myself, but just allowing a lower cost subscription monthly FreshBooks than some of the major market players like MyOb and Xero. I'm a big advocate for Xero. I've used it Xero and MyOb myself for various, different businesses. And Xero, in my opinion, is the easiest. I'm not an affiliate or anything, so there's no vested interest in me telling you about Xero, but very easy to use. Nowadays, we work so much on the road, on the hop, so having something that's cloud-based, something you can use on your mobile phone, and Xero's really easy. You can send invoices on your mobile phone on the go. Really good user interface, simple, straightforward to use. You can also reconcile your bank accounts. So really, really simple. MyOb, yeah, still very good for large organizations. It's a bit more accountancy based, so a lot more sort of bells and whistles in terms of add-ons and things, but MyOb is also suitable for small businesses. But what I guess all of these tools, all of these things here is, for one, try and have an electronic means of managing your money. Yeah, it's fine to write everything down on paper. I love to write notes. I love to write in my notepads, but having something that's electronic, it's all about being accessible. You might not have that paper form with you. Having something that you can grab on the hop wherever you are, might be traveling for work, you might be interstate, whatever it is, having an electronic means on a cloud-based system is so vital and so valuable to you to access that information readily and quickly. And Xero and MyOb in particular do make that very, very simple. So highly encourage you to have a look at that and have a look at those tools. The other thing with them is you can create those projections in there. You can create those plans in there, those financial plans that we spoke about earlier. So if you're sitting there thinking, I want to put all the numbers in, I want to stick all the numbers in something and see what comes out the other side. Xero and MyOb in particular can do that. Excel, you can do that if you're savvy enough with the formulas. If you're not, certainly here to help you. We can help you with that. The other thing as well with Xero and MyOb again is graphs and pictures. I love them. I love graphs and pictures, especially when it comes to money. But you can see very clearly on those platforms how you're tracking. How the numbers are tracking and graphs, and it's so simple and easy to understand month to month and week to week. So have a look. Use the free versions if you're new to business. Use the free versions to start with, just to familiarize yourself and make sure you're okay with them before you go away and spend the money. I've got 2 other webinars coming up soon. We've got touching on cash flow on the 25th of the 11th. So that's cash flow is king. So I did touch on cash flow earlier, how to pay your bills, how to cover your costs, how to increase it so you've got more money in the bank. So if you want to learn more about that, join me on the 25th of November. Cash flow is king. We also have another webinar still talking about money. That's on the 2nd of December, and that's tips to increase your bottom line. So that net profit, how to increase your profit. If you want to find out more about either of them, you can head to businessstation.com.au. The information's all there. You can also email me directly. I will provide my email address shortly. You can email me and I can send you some information about that. But 2 more, probably a good tag on to what we've been discussing today, getting a bit of a feel and an understanding for money today, and then a little bit more involved with cash flow and increasing your profit thereafter. So head to the web address for that one if you want more info. And don't forget as well, as I mentioned before, all this webinar and everything that we're doing is made possible as part of the Digital Solutions Program. So on behalf of Business Station, 7 hours of expert advice. You can get one-to-one advice with myself or any of the fantastic people that are involved in the program. If it's about money, if it's about marketing, sales, workflow, tools, electronic tools to manage your business, whatever it might be, there's someone on there to help you out. So 7 hours for $44, government subsidized, 3 hours of one-to-one advice on any of those subjects I mentioned, and as many workshops and webinars as you want to get involved in. So again, businessstation.com.au. And yeah, that's us, guys. Thank you. Thanks so much. I hope that it was enlightening. My aim really was just to give you a bit of information today, clarify a few things. hopefully not confuse you. I want to simplify money. You know, everything I've learned for myself, living that journey. So I'd love to share it with you in this forum. I'd love to share it with you if you want to email me directly. My email address is there. And of course, this recording will also be available on the Business Station YouTube channel. I'm involved in the podcast and stuff, as I said, not being as active as I used to be, but there's a few on there that highly recommend you jump on and listen to for some inspiration. And check us out on businessstation.com.au. I'll hang around for questions. If anybody's got any questions, there's a few people still on. If you wanted to ask me something, feel free to drop it in the chat box just now. Failing that, obviously, send me an email. Thank you so much for joining me. Thanks so much.